Hi, RealtyNXT viewers. I'm Kritika Singh Rawat, your host for Let's Talk Business series. In our upcoming episode, I have the privilege of speaking with Mr. Jitendra Jagadev, co-founder and CEO at NestAway Technologies, and also the CEO of HelloWorld. We delve into his remarkable entrepreneurial journey, explore the revenue models of NestAway and HelloWorld, address the post pandemic rumors surrounding their company, including the topic of lower valuation, and much more. So stay tuned for an insightful and engaging conversation. So before we begin talking about the acquisition part, which is I'm sure everyone wants to know more about it. So can you share the story of NestAway that was founded in 2015? What was the inspiration behind it?
Most of our friends, relatives, and everyone that we know of, when they move to a new city, bigger city, we all come with dreams. And lot of dreams that it will be a great life and things will be great at once we reach a new city with fulfilling our dreams. So there was one startup called Breeze TV, which we were running, me and my other co-founders. So we had done a lot of hiring for interns. So from Triple IT Allahabad and from Hyderabad, people had joined. And first thing that we realized once they reached was like the difficulties, the ways the city greets them, right? From getting a rental accommodation to every kind of problems that they're suddenly pushed into was quite hurting for everyone. Like that, we understood that's a problem and that's a challenge and definitely a area where we could have an impact. So that led us to kind of think how we can solve and create solutions where people can actually start using and start living, right? So living as a solutions, how we can come across managed living. So that came across as one of our biggest challenge, and that was the most inspiration that we could seek for. And we immediately ventured and started NestAway, which basic idea was to create solutions where people who are immigrants who come to the city for the first time find accommodations very easily. And they can stay, get a roof as easy as possible.
But I'm sure there must be initial challenges also while setting up the company.
Right.
So could you share what were the challenges that you faced and how you overcame those?
Right. So typically in India, getting a house is always one of the larger piece of things. Like it's a 30% of your wallet share, definitely money wise. But in terms of challenge, also like Mumbai or Bangalore had 10 months of security deposit. So 10 months of security deposit, we are asking for people who have just moved into a city.
Yeah.
So it's just not a burden on them; it's also a burden on their families, on their parents. Similarly, no, there are discriminations, like whether if you're like, if you remember, like long back, if you're unmarried and staying, people have all kind of biases, right? So we had to fight against a lot of biases, whether it is giving accommodation to bachelors, unmarried people, giving to different kind of religion. Like we had those kind of problems because every apartment had RWS had multiple problems, there had multiple restrictions. So when we started, our intent was to make it as seamless as possible, so anyone can move across, can come to the new place, can stay. So we made that we talk to the RWS, we talk to association members, we talk to owners, we educate them, we tell them that this is something that they wish, how will they pass it to the next generation, the way we treat them, right? So for us, the bachelorhood became and definitely a religion for us. We made sure that anyone coming to a new city faces the least amount of resistance. So part of that was through education, part of that through convictions, and most of it was like people understood that, and a lot of owners came forward and told that okay, we are going to make it seamless for the new people to come into the city as easy as possible.
So when NestAway was established, you also founded HelloWorld. So could you tell our viewers what was the HelloWorld model all about, and why you thought about venturing into opening HelloWorld?
Right. So actually, we started HelloWorld in 2019.
Yeah.
So almost 4 years after starting NestAway, and so we had in NestAway we had a great run. Like we are like one of the largest funded space in that. We are the largest funded guys, and we had never ventured into co-living. And one of the thing was we wanted to understand how co-living ecosystem is setting up, and we were eventually well capitalized that we could take the market whenever we want. So part of that we waited for 4 years. Like 2016, there are multiple players started, and I think when we started in 2019, we were the 17th player to come into the co-living segment.
Yeah.
And there were 16 other players which are larger than us. Eventually, today we are the second largest in market in the revenue size. But so that was a big journey from coming. But why we came across HelloWorld was typically the type of offering had to be very simplified, and because NestAway was a marketplace where it's an owner and a tenant, and we were a medium. Here it has to be much more a seamless experience which owners can't give. So a lot of policies like 1 month security deposit only, those kind of conditions only a third person has to take that house on lease and can further sublease at much simplified things. So that is how we kind of came across HelloWorld and created something that can go well for much shorter duration accommodations. So NestAway is typically built for 2 years, 3 years, 4 years kind of accommodation for multi-family living, whereas HelloWorld is much more short-term focused, where people come for 3 months, 6 months, 9 months kind of durations.
Yeah.
And they come and they want a completely fully furnished place where they can just move in as soon as possible with just a suitcase and stay here there for like 3 to 6 months of time.
True.
So different kind of policy, different. So that's the reason we created a separate entity. Made sure that works towards those kind of target group, those kind of TG, and that's how we kind of created this.
So as you quoted, there are a lot of competitors in this particular field, especially in co-living.
Right.
So what would you say HelloWorld main USP is that makes it different from other co-living startups or the companies which are already existing in Indian market?
So, Kritika, like I think we'll talk about more about the rental ecosystem as such, right? So when we talk about residential rental accommodation, right? So residential rental market, there are majorly three things that we talk about from a tenant perspective, from a renter perspective. The three things are like typically we talk about a great living experience, right? So great living experience we talk about is people are there to support the renter at any point of time in terms of services and operations, right? So you should have an awesome operating system that works across cities seamlessly 24/7. That's the first thing. Okay. The second thing is we are talking about the type of community living that has to be provided. Why community living again? Because the TG that we are talking about is like is more and more self-occupied with him or herself.
True.
And they get very less amount of interactions amongst their social life. As we have observed that more and more, because people go to office early, come back late, no time for friends. So that social circle we wanted to kind of increase. So that led to a huge community living that we want to kind of put. So that was the second thing. The third thing is the affordability. So what we had observed, because we were the last people to kind of start. So we had observed that if you need to scale in India, affordability is a key. Now, all these three things, like we are talking about affordability, we are talking about experience, and we are talking about community. All these three things can only scale if we enable it with technology.
True.
So the underlying was a tech that we could use to scale. Now that tech has become our USP. But tech is a like very widely used word. But what we mean by pure tech is like we use a lot of AI to determine where we'll take a new building, at what cost, because we can 97% time we can actually predict at what rate will a building will get filled up at what particular rent.
Okay.
So now that has given us the power to leverage take buildings where there will be maximum amount of demand and where the pricing we are able to determine, and that's how we are able to pass the benefit of the unknown to the tenants.
Okay.
So that has become very affordable. So if you see today, we are perhaps not the business class, but we have created like an Indigo kind of a brand, which is much more like we promise less, we over deliver, and much of that has caused to like we are growing significantly, and we have become such a large ecosystem only because of the underlying things that technology has driven that. So we have a tech product internally developed called Localytics, which is an AI-based tool which we majorly use that to determine like what would be a rent at any point and what would be the velocity at which the demand will be absorbed. Like suppose we come up with an accommodation of 300 rooms, then how soon 150 rooms can be fulfilled?
Okay.
So that much of data we have, and those data and those the technology has used. We are used that to build what we have created, a supply chain mechanism for the buildings to come where the price benefit can be passed to tenants.
So make me understand, I get it, you are leveraging technology and data to provide a seamless experience.
Right.
So when it comes to this co-living segment, are you looking into a particular 2-3 units when it comes to a building, or you are looking into completely taking care of the whole floor or taking care that the under construction? Like I've noticed with other players, what they are doing is if there are certain buildings coming in, they are in touch with the builder. This particular floors, you give it to us, we will establish it and we will maintain it and put a co-living out of it.
Right.
So that the houses are maintained, we furnish it and everything. So how does HelloWorld looks into this particular format?
Yeah, so we kind of work across different kind of builders, developers, and even landowners, and we come at a variety level of stages. So sometimes we come very early, which is like typical build to suit properties, which take like 18 months, 24 months.
Yeah.
And so that is at one stage. We also come at much later stage, where the property is almost ready and at a furnishing stage. But wherever we come, the underlying formula, underlying template to come is like the ROI for the owners has to be significantly good. So typically we peg it at like 8 to 10%, which is like almost 2.5 times the resi yield of 2.5-3% that we get in the market. So we kind of standard that to almost 8 to 10%.
Okay.
So that becomes a very attractive figure for a lot of owners, and builders and real estate institutions to come and work with us. And we like work like as small as 30 room properties, like 60-70 bed, and go as high as like 400 bedded properties.
Okay.
So across we work.
So make our viewers understand what's the revenue model of NestAway and HelloWorld.
Okay, so NestAway is a pure rental marketplace.
Yeah.
So when we say about rental marketplace, it's a two-sided rental marketplace. So it's like where owners come and give houses. They list the place in our website, and once the house gets listed, it goes live, and a particular tenant or a renter who's interested, they can come and book it. We charge to the owner, like we charge commissions, which is recurring every month to the owner. And for the tenant, it's always what the rent they pay. So what the rent they pay to the owner, we take a commission out of it. So typically the commission starts at 7.5%. It goes all the way to 12.5%, depending on certain localities.
Okay.
But it's a very standard offering, and it's a pure marketplace of rental accommodations. And very much as similar as you can say to Airbnb kind of thing for short term. So what is Airbnb? We could say that NestAway business model will be very similar to Airbnb for longer term. That's all. Whereas as HelloWorld is more concerned, it is like fixed long-term leases. So we take properties on very long-term lease. We take it for like from as short as 1 year. It can go up to 9 years, and it can also be like where we pay to the owner, we take the property, and then we sublet and sublease to individual tenants. Right. And the difference what we collect and pay is what we make.
Okay.
So two different kind of business models. So that's why like why two different entities in the starting. That is one of the reasons.
So the recent acquisition of NestAway by Aurum Proptech had garnered a lot of attention. So could you shed some light on what was the rationale behind of going with this acquisition, and does it align with the vision of your company?
If you look at the PropTech ecosystem today, right? So PropTech is majorly divided into two broad categories. Okay, so one is the resale market, and one is the rental market, right? So sale if you talk about primary sales, okay, so primary sales we talk about, we assume there are like typically 370,000 units that gets sold in a year in India. Okay, so 370 of, assume for easy of maths, it's 400,000. So 400,000 units get sold with an average price of 50 to 60 lakhs.
Right.
Where typically any, we are talking about majority of the big players that we know, they make around 1 to 2% of commission. Generally assume 2% of commission when it gets sold. So we are talking about 400,000 units which get sold every year with 50,000 rupees. With 2% commission is 1 lakh. So 400,000 into 1 lakh is like 4,000 crores.
Yeah.
So 4,000 crores of is a total TAM we are talking about. Vis-a-vis, if you compare the rental market, so roughly we have 2.2 crores renters in top 8 cities in India. So like Mumbai will have like 15 lakhs of people who are living on rent. I'm assuming very small actually. It's not the largest side. So 15 lakhs in Mumbai. Like that we have 2.2 crores. So out of this 22 million, 2.2 crores, 1.6 million, 1.6 crores is families, multi-family living, which is the NestAway, right? And you have 40 lakhs for co-living and 20 lakhs for students. So 2.2 crores renters, 1.6 is families, 40 lakhs is co-living, 20 lakhs is students.
Yeah.
So 40 lakh and 20 lakh, this 60 lakhs, we have HelloWorld, which is majorly targeted in that segment. And the other 1.6 crores is where NestAway is focusing on. So, and if you look at the market, like the primary sales market was 4,000 crores. Now you imagine like out of this 2.2 crores that we have, they paying average rent if you assume 15,000 rupees at a 15% commission, like monthly commission, what I was talking about NestAway, right? 12 to 15, if we go for 15% commission, that itself is a 60,000 crore market. So at the rental, we are looking at a large chunk of PropTech, which is 60,000 crores market, just in India in top 8 cities. And with HelloWorld, we had reached 20-30% of the TAM. 70% of the TAM was still left behind. So with NestAway, we are able to look at those 1.6 crores renters who are present in across 8 cities in the multi-family living segment. So now you have multi-family living, you have co-living, and you have student living. So we have now completed the whole diaspora of people, like from all kind of TGs. That makes it fulfilled. Like we can now expand, and our TAM is 60,000 crores. That's what we are looking at. And with the right things working for us, like in terms of going to the same marketing initiatives, same performance, because like before we had almost reaching the similar kind of demand through HelloWorld. Now we can reach a similar kind of TG with NestAway, and our lot of events, lot of things we can make it similar, and we can combine it so that we can get a better outcome. So that was whole the reason, like we could completely take care of the rental market and become have a monopoly, become the largest player, and take up this market. So that was the whole reason of going ahead with the acquisition of NestAway.
So basically, you wanted to expand the market and also stabilize wherever you are present. So that's why this acquisition happened. There are a few reports where it has been said that NestAway has accepted a lower valuation, right? And there has been a lot of talks on that. I want to know from you as an entrepreneur, as a founder, and I know it's very difficult. It's very easy said and done. The valuation was this. Why did they settle for this? Is it going in a low revenue wise, or what was the case? I want to know from you now that what was the reason behind this decision? I'm sure there must be too many things that had gone in your mindset, in your other founder mindset, to settle for a certain valuation. How did you come up with this decision to settle with this valuation?
This will have more philosophical answer along with the numbers. So life is long. So and in life we get multiple opportunities, and in every opportunity, what I feel is a journey where we learn things, we explore and try to create an impact. So NestAway, we had a big ambition of creating a large impact, and we had fairly been successful. Like we actually have served almost 100,000 tenants across, and we had made their life easy by a lot of people coming in and settling in and much easier. But the whole thing was, it's a huge market. We are talking about 60,000 crores market, and we were like less than 2% that we have achieved. So we had a long way to go. And for that long way to go, we actually needed someone who could come with not only just a capital support, but who have done similar kind of businesses. They have understood, they have delivered much larger things, which we are now looking forward to. So that kind of support, that kind of originality, that kind of power came through Aurum. So what we liked really about them is like they have been like hugely successful in delivering certain things that at a large scale. So that was a perfect match for us. So when there is a perfect match, we had the chance to fulfill what we had an ambition of. So if you club everything together, valuation is interim, right? So valuation is not like, it's not like we are kind of telling this is the end of it. But what we said that this is a shortcome that we have actually kind of agreed to in the interim, just to have a larger value at a later point of time. So that's how we have kind of, if you ask me, we have further postponed our outcomes by making sure that we come across, find the right partners to take it further, and then create a much larger value impact.
Okay. So also tell us, during COVID-19 pandemic, every industry faced a problem. And of course, we saw, especially with the real estate industry, also facing huge problem when it came to the rental market, when it came to the co-living. So as company NestAway and as even HelloWorld, I'm sure must have faced problem, because we noticed the properties had reduced in the platform, right?
Right.
So how did you manage this challenge and how did you overcome this particular challenge, especially during the pandemic period?
In terms of COVID, like majorly we were like almost 90% down in terms of revenue within the first 3 months, and amongst the real estate PropTech players, like any co-living, like any managed living, everyone was equally affected at that point of time. And we had seen like very fast exodus of tenants to their original natives, and that's why the rentals kind of dropped. In terms of impact, NestAway is on a purely like revenue share model as a marketplace, right? So we were not having any obligations to pay to the owners, because whatever revenue the house makes, that gets shared. So that way we are little safe. HelloWorld, there was a little impact more, because we had to still pay our commitments. But everyone was more kind of welcoming to the problems together, and all the owners supported us, and that's why we were able to manage the calamity much easier. So if you compare to like NestAway and HelloWorld, we were both okays, and we kind of struggled through the initial during the lockdowns and all. But post the lockdowns, the business kind of revamped back. So for example, at HelloWorld, post pandemic, we would have grown like almost 3 times now. At NestAway, the largest challenge was we had not of like, compared to pre-pandemic, we were almost having 60,000-70,000 houses pan India. So that reduced because it was a marketplace. So in HelloWorld, we could control and still own the properties and still kind of manage the properties. That advantage we didn't have in NestAway. So those houses, those supplies went away. And post-pandemic, many came, many were sold out. So that amount of houses actually could not come back. So that led to a reduction in the supply side. So we became almost like 60-70% drop. But today we are okay. We have actually come back a long way, and it is going well now.
And also we have noticed in global market, the maximum majority is the rental market, right?
Right.
But when it comes to India, the rental market is very few players involved. NestAway, no broker. But when it comes to revenue, right, the revenue medium is quite narrowed. So we are seeing a lot of other players also, coming up with new verticals by providing loans, by providing interiors, by providing renovation work, moving and packing. Do you think this kind of revenue model will only happen because of this rental market being a very restricted market? The kind of revenue that could come from a tenant and owner is going to restrict your revenue also, and you need to expand yourself into these different verticals as well?
Kritika, so here I have a fundamental belief that the market is immense. Managed living, as you well rightly said, has not even been less than 1% of the overall TAM we are talking about in India.
Yeah.
So if you look at the successful stories we are talking about, right? So because you have mentioned about global landscape, so I'll take the opportunity to tell you how it's globally it's happening, right? So I'll talk about like US, like Adam Newman has raised 350 million now.
Yeah.
For the flow, right? Flow is what? Exactly residential rentals. Exact thing what he's talking about is NestAway.
Yeah.
Right. So and Mac Anderson has put 350. He is well renowned for his investments, right? We are talking about, but I will say that okay, US, the landscape or the ecosystem is much different than from what we have in India. Okay, let's take an example of Brazil. So in Brazil, Quinto Anda. So Quinto Anda is the largest player in the rental management, and again, these are all not in the sale resale; they are all in the rental side,
Rental, yeah.
right? So Quinto Anda manages roughly around 80,000 properties, 80,000 houses across the major cities in Brazil. And recently, they raised funded 6 billion valuation, 5.5 or 6 billion valuation, and they're looking for and filing an IPO soon. They're going public. So, and exactly, if you look at his one of his interviews, the founder says that someone asked them that are you a replica of Trulia? Then he says that no, I'm not a replica. I'm a replica of NestAway. So,
Okay.
so that way it's integrated, right?
Yeah.
So we're talking about like exactly similar things. So then you go to take China. So China, you have Mofang, you have Z Rooms, all 5.5, 6 billion. Everyone is above 5 billion in terms of valuations, right? And everyone is like pre-IPO or some have actually hit the IPO now. So all of that states like globally rental managed living is winning.
Yeah.
Right. That also why I told Brazil and China people ecosystem and market wise they're very similar to India. Right.
Yeah.
So why in India has not happened? I'll say that much about the opportunity has never been that big because of the timing of the problems. So
Okay.
all of these players actually, if you see, like we are talking about Z Rooms, we are talking about Mofang, we are talking about Quinto Anda. All of these are 2011, 2012 companies. So they had actually become quite matured, quite big before the pandemic hit.
True.
So they were able to sail through the pandemic much easier than the Indian counterparts.
Okay.
India managed living started in 2015, late 2016.
Yeah.
So in 3-4 years, they all faced pandemic. We are not ready. So if you ask, like for example, HelloWorld started in 2019. In 1 year, we had not even completed 1 year, pandemic happened.
Yeah.
So suddenly we are starting building. Now we have to build a fort. We are given an architecture to build a house, and suddenly someone comes, no, you have to build a fort. It cannot happen, right? So it takes time. So that's the reason. If you ask about India landscape in managed living, we didn't have the right timing. But I see it as a big opportunity, and it's a huge opportunity in terms of market size. Definitely, we see that itself can create a multi-billion revenue size. So we really don't have to look into different verticals. We really don't have to look at other things. Why different verticals is a key is like the same customer you don't want to go for multiple platforms. Like suppose a customer has come and he's actually taken a house. Now he wants to move his accommodation materials from one house to other house. So then you can give portal services, which is like supporting your tenants, supporting your customers.
True.
So till that extent, I think that's fine. But as a market structure itself, managed living is itself huge. So definitely huge to like if anyone is 4 to 5%, he's doing like at least 1.5 to 2 billion revenue per year. 1.2, like I think more than 10,000 crores. Definitely that's a size if you just do managed living properly.
I agree, but what do you think when it comes to VCs? Because when we see venture capitalists getting into real estate, and for them, this rental market is something which is quite, they are skeptical about. They are pouring in money when it comes to B2B. They are e-commerce business in real estate. They are also pouring bit money into, which is having this brokerage model because you know what the kind of revenue will come in. But when it comes to rental market, like how I quoted earlier, why I'm seeing other players getting into different verticals is because they are either the market is not mature or you're not able to convince the VC that this model, when it comes to rental market, which is in comparison to global, having the major, coverage or capture in the market in India. Do you think the maturity level of this understanding is still not there? And why do you think when it comes to VC, they are a bit skeptical about this particular market?
So we see, I think really believe this skepticism that we're talking about, like the negativity people, typically VCs have the doubts over the managed living is post pandemic,
Hmm.
right? So the pandemic actually kind of changed the way people were living, right? So a lot of VCs that I also talk to today, they see that as an opportunity also,
Hmm.
right? Because the way people were living has substantially changed, right? So if you look at people pre-pandemic, office was the only place people
Yeah.
used to go,
Yeah.
right? Morning, evening, 5 days, 6 days a week in India, we are there in office, right?
Hmm.
Suddenly that went out of people's life and like just vanished during the
Hmm.
pandemic, right? And then house became important. So
True.
number of houses started people learning, like people started even the rental accommodations. And today what we're talking about is like where mostly tenants are much more focused in having an experience but not an ownership, right?
Yeah.
So that transition. So now what where people are going, they need a home.
Hmm.
Like our all the other generations, everyone needs a home,
Yeah.
but they don't want to own it. They
Hmm.
need a home where they can have an experience,
Hmm.
they can have memories, everything, but they don't want to buy it.
True.
So now this transition of behavior is happening drastically, and lot of new kind of VCs are signing up for that.
Hmm.
There was a time when this managed co-living started across the globe, and
Hmm.
that was in 2015, 2016,
Hmm.
where like I think most of the global landscape, like for Quinto, Tiger Global was investor in Quinto and also was in NestAway, right?
Yeah.
Similarly, Goldman Sachs. Lot of even at NestAway, we got all the major VCs invest at
Hmm.
that point.
Hmm.
Because at that point, it seemed like this market will just evolve
Hmm.
and it will actually become much easy and much bigger
Hmm.
with time.
Hmm.
So that assumption faced real challenges during the COVID times.
Hmm.
But after COVID, now we are almost 1.5 years.
Hmm.
And what I see that over the next couple of years, this market will attract good amount of investments because now people have understood what happens if another pandemic happens.
Yeah, I was
So,
going to ask that only. What
so
if another pandemic happens? Are we prepared,
yes,
especially this particular market?
correct. So that is how markets, how these startups, how these companies have evolved.
Hmm.
Is now we have a book
Hmm.
which says that what we need to do when this happens.
True.
And
True.
I assume most of the other players would also have that.
Hmm.
So that maturity, that has what how we have evolved, that has created like yes, we can handle pandemics, we can handle any kind of this kind of things in the future,
Hmm.
which
Hmm.
can create this ecosystem because no one doubts the size of the market.
Yeah.
If you ask me, right?
True.
So we are much bigger in size than Brazil,
Hmm.
for sure. But what people doubt is how we will be successful and who will be successful. So any company that comes in the top three
Hmm.
of this and they're successful, you are because see to be successful, we are talking about the unit economics has to be good, right?
Yeah.
So we cannot have a bad unit economy which can scale. So then you
True.
have a like PNL which will not last.
Hmm.
So VCs have evolved. So like if you ask me like in 2015 when we started NestAway, it was an era of GMV, right? We are talking about GMVs.
Hmm.
Not us, any company that you talk, our numbers will always start with GMVs,
Hmm.
right? Today we are talking about PATs. From an era of GMV, we are back to an era of PAT.
Hmm.
So that transitions is what VCs have come, how VCs have evolved in India,
Hmm.
right? So now, if anyone is talking about raising funds, it's
Hmm.
just not an idea.
Hmm.
It's a healthy unit economics
Yeah.
with good amount of traction,
True.
which you have proven. You are already having positive EBITDA, or you're talking about PAT,
True. Yeah.
and then you are at a good sizable size.
Hmm.
At this point, then you will have a lot of investment that can come.
Hmm.
So what we are talking about is not like this segment is not having funds
Hmm.
or funding, but it is overall. If you see the startup ecosystem,
Hmm.
it is going through that transition now.
Okay.
And where I see this is a very big opportunity
Hmm.
and a lot of players.
Hmm.
we'll have substantial funding that will come in with
Hmm.
our time.
I'm sure you must have heard this, and I've asked with few PropTech founders also. When it comes to unicorns, right, we have very few, like you can count them in fingertips in PropTech, counting which are the unicorns.
Right.
And when you compare be e-commerce business and other industries where the unicorns are too many, be education or fintech, so what is happening with the PropTech landscape? Why are we not having too many unicorns coming in? I know it's a very naive question, but I want to understand from you because you have seen the journey from 2015. You must have seen how the PropTech landscape has changed over the time, how the VCs are coming in. So why do you think we still don't have too many unicorns from this particular landscape?
In terms of it's a multi-body problem, right? In PropTech, you have too many variables.
Hmm.
Okay, like suppose we say rental. Rental means like your agreement has to be done, your KYC has to be done, you have to talk to owner has to approve. So there are too many variables, right?
Yeah.
Now imagine much other ecosystem like we're talking about e-commerce,
Hmm.
okay, or fintech.
Hmm.
The multi-body reduces drastically in those ecosystems. Okay, so the type of problems that we face today in PropTech
Hmm.
are like it's a market which is not that organized,
Hmm.
and definitely it's not that matured. So that maturity and that organization level, that has to be clean, that has to be transparent, policies have to be very adaptable, clear.
Hmm.
So those have not yet happened. There are still a lot of specific, like each state has their own policies,
Yeah.
right? And each state has their own kind of agreement format, everything. Okay,
True.
so that has not been standardized and not been transparent yet to a
Hmm.
much level, which is not simplified the whole thing. So one, why it is important, because more the complex things, the slower is the growth.
True.
So the more it becomes simpler over
Hmm.
time, what I expect over the next 3 4 years, it becomes much simpler.
Hmm.
You will see a huge rate of growth that will come to this PropTech side of the world,
Hmm.
and that will actually fuel directly investments, and we'll see unicorns happen.
Yeah.
So if you ask me, I think this sector is quite early toward if compared to the other sectors,
Hmm.
and with time we are evolving faster,
Hmm.
and definitely I see that over 3 4 years we'll
Hmm.
have some sizable large companies here which
Hmm.
will actually go into unicorns.
So as you quoted, the market is still not organized, right?
Correct.
There's still standardization needs to happen, still enabling of the tech throughout the be land records or be all these data needs to
Right.
be there. I completely agree with that. But this is the reason why even a venture capitalist will shy away, right? Because they know it's not organized. They rather bet their money in B2B, like how I said, the companies like off business, infra market, who are then into procurement because it's more on the online platform where you're procuring the materials and providing, and it's very easy. It's a mature market. It's quite tech driven. So don't you think in the market which you're talking about and targeting on, of course, it's going to take time. We will be there. But in that case, the VC might shy away, right?
Yeah. See, it depends what kind of VC. Like if you are looking for a VC which is like 3 year outcome or
Hmm.
2 year outcome, you're looking for a series A, B VCs.
Hmm.
Definitely, I agree to that will be a challenge. But anyone who is looking at a larger P side, right?
Hmm.
We are talking about who have a 6 to 5, 8 years, 7 years kind of vision. Those they understand that this is a market which has the potential,
Hmm.
and definitely there will be large companies which will come and be created here,
Yeah.
which will be substantially big, and they
Hmm.
will be, because of the quite healthy unit economy,
Hmm.
what we see that they will all be profitable. So that opportunity will lure, and actually is luring a lot of larger VCs
Hmm.
into this market. So what I see is definitely the challenges that you have told is short term, and we should be able to have much value added companies which will happen, and good amount of VCs will come in the
Hmm.
next 3 to 4 years of time.
And what is your current perspective on the current PropTech landscape in India? Do you think there are few companies which you could want to quote that you look into are going to be a major players in this particular market? And where do you feel the PropTech landscape needs to evolve? There are certain need gaps I'm sure you must have noticed where we would be needing such companies to coming in. What is your view on that?
Apart, so I am personally biased against with in favor of rentals. So
Hmm.
definitely, I see that is the larger piece, because this will become much and much easier for people to move in, and we are looking at different kind of accommodations now, where people will be having completely, they can like move across cities, across locations very easily without doing anything. So that is going to evolve. The way India lives actually is going to change. But in terms of other aspect is the capital side of the real estate, that will change drastically. What I see with fractional ownership coming in, and we are talking about uh, everyone like REITs coming in more frequently, where the opportunity can be exposed to any small size investor who can participate in the real estate growth of India. So that is an exclusion that is happening now, where smaller investors are not able to come into the picture. So that will change over time. So any startups around fractional ownership, around REIT, anything around where you capitalize the rental or the real estate instruments. So that's having a good, that will have a good appetite in the future. So that I foresee like it's going to take up the market.
Great, you brought that in because I want to understand in the context of rental yield growth, right?
Correct.
Traditionally, we have seen pre-lease asset of commercial to be favored more.
Right.
But because of the rise of co-living, there's another potential option when it comes to pre-leased asset in residential. So I'm curious to know if I want to do the comparison between the commercial pre-lease asset and the residential pre-lease asset. Even I'm sure our viewers would want to understand. Could you tell us what is the major difference between both and which one has the better rental yield growth and potential?
Yeah. So commercial, when we are talking about like pure office grade A office spaces, which will go into as a yield plus an like appreciation value that will follow that. So those kind of properties are definitely a clear section of like 8 to 10% rate of where you get a rental yield of 8 to 10%, and then there is appreciation which is very similar. Co-living, where it comes, where the size of the property may not be as high as required to, as large as required to a co-working or a office grade asset kind of thing.
Yeah.
So where co-living can come in, it can come in like as small as like in a 6,000 square feet or 4,000 square feet, or even like 3,000 square feet land, right? So we are talking about that kind of land where you can build like 30 rooms, 40 rooms, and you can start with a smaller size. So that initial moat that is required for the commercial is not required in the co-living side. So that opens up the doors to a lot of mid-scale investors, mid-scale landowners, HNIs to start this and come and own that. Compared to the yield wise, both are very similar because resi yield will be like 2.5 to 3%, whereas a co-living asset class, as an asset class, its yields are around 8 to 10%. Very, very similar to commercial.
Yeah.
So they're at par. Appreciation are actually on par. You can say that okay, both are located in the prime locality of a city, both will grow at similar level because both are related to the land rates eventually, right? But what I like more about the co-living as an asset class is that any person at a lower size can come in. So that entry barrier is substantially lowered compared to the co-living, compared to the commercial offices. And that we have seen. So what we have observed is like a lot of today the owners that have given us supply actually are not full time into this before. So for them it's just an investment that they've done.
Yeah.
And that is growing substantially. So we are getting a supply. We are going like a huge amount of leads that we get every time, and that has kept on increasing very fast. And where we have observed there's a pattern that we have seen that this asset class is growing very fast.
True.
Because the land side is smaller, they cannot give for office. Let's build a co-living. Rather than the other option was what? The other option was resi.
Resi, yeah.
So resi is again you are working out 2.5-3% yield.
True.
So that has made a huge impact for the co-living asset class.
So even in the recent report by Colliers India, it showed us that there's been a steady rise in the student housing post-pandemic.
Right.
So what do you think would be the attributes to its growth? And in future, where do we see student housing going, especially in the Indian market?
So student living, typically there are multiple pockets in top 7 to 8 cities, which are majorly student focused. And where we see that, again, like very similar to the co-living trends. Student living has become a norm now. So
Yeah.
a lot of people, even I have seen like in larger cities, parents are staying in the same city, but kids are preferring hostels.
True.
One of the reasons is like long time of travel, like people
Mm.
commuting has definitely increased.
Mm.
And second thing is like people want to also have a more community or social experience where they
Yeah.
want their parents want their kids to have more social experience also.
Mm.
Those are trends. We have seen significant growths,
Mm.
and typically in markets, we are the market leader in pre-student category, like which we talk about in quota,
Yeah.
like coaching markets. So in quota, we have seen like huge growth in demand
Mm.
over the years, where a lot of students come there for preparation, and these are like not even they're not even graduates. So it's like students in 11th and 12th class,
Mm.
who are like 15, 16-year kids. So they are also coming and adapting to this new style of student living. As a offering, what I see that student living is going to be growing at a very fast scale,
Mm.
and it is going to grow not only in specific student specific cities like Pune, Kota, and all, but
Mm.
also in major large mega cities like Mumbai, Bangalore, and Delhi. They will
Okay.
also see a lot of growth in student living.
Mm. So 2024 being in the around the corner. So based on you, according to you, the what would be the major trends that you will see? You have quoted about student housing. When it comes to co-living, when it comes to the rental market, what particular trends are you looking forward to?
So the rental markets have seen a very high tailwind
Mm.
because post COVID we saw like lot of companies now asking people to come back.
Yeah.
So before it was one day, people used to. So what had happened interestingly is, so we were because of our data is very insightful. Okay, so and we are the first hand.
Mm.
COVID, people are going back. We were the first to know because so many requests came the very first day.
Mm.
And we also, so when you look at our data, like a lot of interesting facts come out. And one of the things that we were surprised to see was because of the price of rental
Mm.
changes with distance. Okay, we see it either going up or going down as
Mm.
we travel from one location to other location,
Yeah.
right? So because once people started coming from the tier 3, tier 4 cities and towns back to the metros
Mm.
post COVID, they observed that they have to come like one day office, max, or
Yeah.
sometimes people say that you have to be present in the city, you don't have to come to office,
True.
right? So people started taking like 20 kilometers, 15 kilometers away from offices
Yeah.
because they thought like I have to commit once,
Mm.
and people assume that that's going to be trained for ever.
Yeah.
So a lot of traditions were that will never change back again, right?
Mm.
So that as a norm I have seen now drastically changing. So what I saw, people were the same guys, we have seen the same renters, they actually went away home, they
Mm.
came back again. Before they were staying like 5 kilometers or 4 kilometers from their office, they now suddenly moved to 20 kilometers from office. After 1 year they're again back to 5 kilometers from office.
Mm.
But in this whole transition, the 5 kilometer of from office, that rent has gone up by 40%.
Yeah. Yeah.
So that's a change that we observed, and there's
Mm.
a lot of data around it. So what we see that is a very upcoming, and it will continue to happen because we see a lot of people have to come back closer
Mm. Mm.
because commuting times have been like really bad now.
Mm. True.
So we will see that happening a lot. So and that will give rise to a lot of co-living demand. So we
Mm.
see like today we are out of supply in prime areas
Mm.
because the moment we so a lot of demand. So so we are not able to adhere to such kind of demand today.
Mm.
So that is happening because people really don't want to travel so far. And you'll be surprised the type of TG it is changing drastically. So in co-living, before it was like suppose an unmarried person who was staying, who was in higher 20s or lower 30s. Now we are seeing like couples are staying, married couples with one kid also staying in co-living.
Okay.
So that is a trend which is very new for us.
Mm.
So we were even not able to understand why it was happening. Then we
Mm.
understood that this particular family had gone 20 kilometers. They came back. Now there is no accommodation left.
Right.
So they moved into something like this.
Okay.
So then this kind of asset class
Mm.
becomes a very much of the need of the hour.
True.
And because you can't build villas, you can't build houses, you can't build 3 BHK large apartments in everyone in the prime areas.
Mm.
So prime locations will always come with more consolidated living
Mm.
solutions.
Mm.
And that's how I see a much upward trend for co-living in the major locations of the cities.
So before I start my rapid fire, I want to know from you, especially You have seen ups and downs when it comes to your own company, be NestAway and HelloWorld. What would you advise to the young entrepreneurs who are entering into PropTech industry, even when they are not able to raise funds? What kind of advice would you give to them?
So I've been an entrepreneur for a long period of my life. So like I started my career briefly in Philips, and then like I was wondering what like last 15 years I've been an entrepreneur. So another thing is like definitely it's the best thing that you can try for. This is the thing that you are most probably will never have a regret for this.
Hmm.
So what it prepares you from within, like you can face enormous amount of challenges. You will be prepared that you will not be giving up very easily on things. So the things that entrepreneurship prepares you
Hmm.
is for life. What we say, like so you
Hmm.
will be open to like open to criticism.
Yeah.
You will be able to you have to manage your employees. You have to manage your investors. You have to manage your family. Everything, right? So for
Hmm.
entrepreneur, life is people say difficult, but I say it's very challenging, right?
Hmm.
So, and while dealing with those kind of challenges, inwardly we don't even know, but we are creating ourselves in a much better format. So, what we are actually becoming is much better of us.
True.
And that is a journey that I would recommend for every entrepreneur to live for it. Because what you would eventually become is a much better person, and you will be able to handle problems in a much better way.
Hmm.
And what I see is like definitely capital is never a problem. Capital will always follow good ideas, good stuff. Find a good co-founder because the journey is going to be long,
Yeah.
and find a good co-founder who has much more. You have abilities to work along together, and with that you can have always access to capital in the long run, and build something that has credibility over the long run. That's a need from people, and with that we can build it.
Hmm. So, starting with our rapid fire, which is quite famous because it gives a good, perspective about you as a person, also to our viewers. So, tell us if you had to share a title of a book which has created a good impact on your life, what book that would be?
The Founder's Mentality is one good book, which I
Mm.
think every entrepreneur has to read it, and definitely as a employee, from employee to an investor, everyone has to understand how it works. So definitely that's a book that I would recommend.
If entrepreneurship wasn't your path, which profession would have pursued and why?
I would have taken something more on the innovation, technology innovation side. I
Hmm.
would have much more gone into building large scale tech products and taken some career from like software engineering on the deep tech,
Hmm.
that side.
Nice. So, reflecting on your journey as a founder, what stands out as the most challenging decision that you had to make?
Challenging would be definitely pursuing NestAway and HelloWorld at the second stage,
Hmm.
which is like creating it part of Aurum and taking it further. So that
Hmm.
is a big decision at this point of time, and I would think that the large set of things, that's the best decision I've taken.
Do you have a productivity hack that consistently helps you stay on top of your task?
One thing at a time. So that's very much required.
Hmm.
So what how I have evolved is like I used to take pride of working long hours
Hmm.
and working on too many things at the same point of time.
Hmm.
How I have evolved is I really categorically prioritize things and make sure that at any point of time I have just single thing on my focus, and I focus on that part and
Hmm.
make sure that that's completed, and then I move to the next one.
Nice.
So that prioritization is very essential. Otherwise, we spend a lot of time. We think we are working, but
True.
the bus is not moving.
True.
So
So entrepreneurs receive a lot of advice when they start their journey. So I'm sure you must have received one of the best advice that you still follow. And there must be one of the worst advice that you must have heard, not followed, but would have made you chuckle.
the worst advice has been like typically that came along the duration of 2015 to 2020 for a lot of entrepreneurs was grow fast, right?
Hmm.
So everyone was told grow fast. Nothing was asked, just grow fast. And all of us, many of us actually went into that, and we just went and just grew fast without looking at any business numbers apart from the top line.
Hmm.
So that was one of the biggest mistake that I had done. And definitely, I think the advice that I got was actually very wrong if I look at the point of things.
And the best advice that you have
Best
received?
advice is also very much similar. So what this is from an Indian successful entrepreneur who had given me,
Mm,
without quoting his name. He said that whatever happens, the profitability has to be the first,
true.
followed by your experience, followed by growth. So growth happens when you are focused on getting the profitable stack in place. If you focus on the experience part, growth
Mm,
is an outcome. It is not a target that needs to be met. So growth, we should not be following like we need 20%, 30% quarter on quarter growth. That's
mm-hmm.
an outcome.
Yeah,
So we have to rely and focus only on the things that we can count as our output,
true.
not the outcome. And output has to be how the experience matters,
Yeah.
how the business individual metrics matters.
Mm.
Growth is an outcome, so it should happen automatically.
It's a great advice.
So
Yeah.
we actually kind of get lost. Like we means I used to do that. Okay, I need this much of growth, and from there I'll start.
Yeah,
Whereas it's a leading. We have to get it automatically. It will happen if you do all these things right.
true.
So that's where the transition for me also it has happened.
That's a great advice for sure. Also, tell us when you build your team, what are the three top qualities do you prioritize when you are looking for your team members?
The first thing that I see the grit or the perseverance part, like both, that's very much required, at least for the senior leadership that we see, like
Mm,
that's very much required. So some of the few questions that I ask is how they have dealt in difficult situations which are prolonged for a long time.
mm,
So generally, we have very smart people, right? Hiring
mm,
like you have a good amount of talent available, and they have great solutions for any kind of problem.
yeah.
But did they have any problems in life which went on for some long period of time, and how did they overcome about? So
Mm,
that becomes very crucial
mm,
as a very important factor for me hiring is that whether they have the perseverance
mm,
to kind of deal for a longer period of time.
true.
Because what I see is where I have seen it's not working out is where patience has been less.
Mm,
People have given up early. So
yeah.
that's a quality I see as the highest.
Mm,
Okay. Then comes ethics, and where we are talking about how you will giving multiple scenarios. Obviously, the easier one is not the best one,
mm,
and though it's a difficult and longer one, but whether you are following all the best of ethics, like whether it's the right thing for your employees who are reporting to you, whether it's
mm,
right for the investors, whether it's right for all the shareholders.
mm,
So that kind of understanding has to happen. So ethics is very important. The second I would rate it. The third is like your problem solving abilities.
yeah.
So because as we know at a leadership under the senior leadership, you will be thrown into multiple kind of problems which you have not prepared yet.
Mm,
No one could have predicted the pandemic to happen, right?
mm,
And it happens.
yeah.
No one would have predicted like the Gaza Strip would happen, like war. It can happen. Ukraine can
Mm,
happen. So those type of things are non-predictable. So your team should have a huge problem-solving ability to kind of come across any kind of problem and able to come out with a good solution.
true.
So these are the three things that I like. Perseverance has to be there.
Mm,
That's the first thing. Then the ethics, and then the
problem solving.
problem-solving.
And if you have to describe your leadership style into three words, what that would be?
What I have is like very, very normal. I think it's very, very common abilities of leader, but something like I say that I never give targets.
Mm,
I always seek targets. Like it's something that people have to own. So
mm,
what you have the people below you, they have to be empowered to the highest extent,
mm,
and I will be there to kind of solve any of the problems that they are facing,
mm,
any of the failures that they are facing. That's my ability or my job to get that solved.
mm,
So that way, what happens there? The owner mindset that we always talk of, like
mm,
entrepreneurs should have owner mindset and all, that gets passed on.
true.
So everyone has to have that ownership feeling
Mm,
from top to bottom,
mm,
and that can only be started from the leader.
yeah.
So if I'm empowering my people below
Mm,
with maximum abilities, like they can do everything.
mm,
I'll say that you have all the arms, you have all the ammunitions, and you can go.
mm,
And if you fail, if anything goes wrong, you just pass the blame to me. So that way they're empowered and they go ahead.
mm,
And that becomes a huge kind of a mode because then your team's excellence, your productive metrics, everything drastically improves.
true.
So that empowerment is something that I kind of take care.
Mm,
And that's part of the major leadership that I do. Otherwise, like everything else is same. But this way, like for example, I told you I will never go and say that this is your target ever.
yeah.
I have never done that.
Mm,
But I would say that what's the target that you think you can do?
mm,
Tell me what all things you need and how I can help you to get it there. So that way, everything is people who are working much efficiently and about to empower and tell that, okay, this is my data, this is my area, this is my sales, this is my marketing, everything becomes mine, and people have taken ownership and they have actually outperformed much better.
No, that's quite interesting to look at. Like not giving targets, but asking them to give targets. It of course makes them become like a self-starter.
Right.
It motivates them to achieve certain goals which they are going to commit. This is what I'm going to achieve, which is a good way to look at.
Right.
So tell me, after a demanding day, how do you prefer to unwind and recharge?
Mostly like a few days, couple of days, I make sure I watch Netflix and a few OTTs that I always have passion about. So that is there, and reading books. Like evening post 10 o'clock, I preferably read and write things. So making sure that is there anything that I want to capture as a learning, and journaling is part of life, but it is mixed with binge watching like over the weekends. Everything happens.
Nice. So, are there any emerging real estate trends that you believe will have a profound impact on the industry future?
Definitely, I see real estate as an investment unit, as an investment vehicle. That will happen. Lot of retail investors will join the real estate movement. People will start investing in real estate stocks, kind of thing, which are directly owning an asset. Today, it's not happening. So, REIT kind of formats in much adaptable format, it will hit the market soon.
Yeah.
So, and that is where the ecosystem will evolve, and people will be like, should be able to invest 5,000 and own a piece of it.
True.
So that's something that I foresee is coming.
So, in this dynamic world of real estate, what's one unexpected lesson that has left a lasting impression on you?
I think the largest piece was always the pandemic. So that taught us like, yes, anything, any scale can happen, because everyone was telling nothing will happen, and suddenly like one announcement comes and everything, the whole world stops.
Yeah.
So that actually was very, very surprising. Like we were never expecting, and then it happened. And then how do you make sure you huge team everywhere there is a confusion, what will happen? So that prepared us a lot, and that's something the biggest I have seen till that.
So, beyond your current focus, is there any other real estate market that currently piques your investment interest?
In terms of real estate, typically I have also invested in AIFs. Okay. And looking into that as an investment area. It's a very interesting area of ownership in real estate. And definitely in real estate, what I see is people going for fractional ownership with regular income. So people, as I was telling, like the ownership that I should own this house, that is going drastically away. Yeah. Now people say that I should invest in real estate because it will give me this much return,
Yeah.
and this much of ownership, which will give me this much appreciation later.
True.
So that thought has come to this new set of people of as investors a much big way. And that is where also I am kind of investing, and I keep on investing in those alternate investment categories where we just invest, we own part of things, and that gives me regular income apart from the appreciations.
Nice. So, could you describe yourself in 5 words that capture your essence?
Very, very simple words like always a learner, deeply insightful in terms of spirituality, love economics, fourth is family man, and fifth is love traveling.
Nice. So as we approach the new year 2024, what are the most things you're looking forward to? It can be personal or even work.
New Year personal, like much more into, I'll be traveling to some different country again, and in terms of work wise, really looking forward because there is a lot of activity that will happen in the rental ecosystem, what I foresee. And as simple as like I am looking forward into the real estate PropTech part as one of the larger things that will come up in the whole invested market scenarios. So you will see a lot of investment, lot of traction happening in this segment in 2024 because it has evolved over the pandemic 2 years. So that is something that I'm looking forward to.
So thank you so much, Jitendra, for joining us today and sharing some great insights about NestAway, especially the acquisition, where it not has been spoken much about, especially from you. And after, I think it's been a while that you have come in public, and it's wonderful that you chose RealtyNXT, the platform where you could discuss all the years that you have gone through when it comes about NestAway and HelloWorld.
Thank you so much. Thank you for that time. Thank you so much.